Hello investors, Lior here and welcome back to the channel where real estate meets reality and a little sarcasm. Before we dive into today's foreign national financing case study, here's your US real estate and mortgage market update for May 2025. So basically the mortgage rate still floating between 6.4 to 7.2 with DSCR loans for foreign nationals seeing interest rates closer to 8 to 9%, depending on liquidity and LTV. We closed for foreign national 5.61%. So it's all possible. Housing inventory still tight in hot markets like Florida and Texas. Sellers are hanging on to low rate mortgage, and buyers, they are still waiting for that mythical crash that never comes. And of course, investor trend, multifamily demand is high, but lenders are stricter than ever. If your bank account looks like a college student fridge, empty except for one slice of pizza, you're not getting approved, especially not on a DSCR loan. Now, on to today's topic, why foreign nationals need US liquidity to close DSCR loans. So you'd think bringing millions from abroad would be enough, right? Not so fast. So today we're going to look at the case study loan 1275, the borrower at the property, the rental income, the documents, but missed one key thing, US-based liquidity. No money in a US bank account means no deal. Even if your offshore account has more commas than Elon Musk tweets. Here's why. Lenders need trackability and immediate access. Underwriters panic if your reserves are in a cousin's offshore trust fund in the Seychelles. And it's all about compliance, risk, and confidence. So what should you do? All right, so today we're going to dive into what you should do in order to get the liquidity into the US. So first of all, of course, open a US bank account. We're going to show you how. Transfer at least 6 to 12 months of reserves before applying. Keep records showing it came from your company or yourself. So a bonus tip, don't wait until closing week. You'll be calling your banker like a desperate ex. Final thought. In DSCR land, it's not just location. It's liquidity, liquidity, liquidity. And remember, if you are unsure whether your bank account qualifies, just ask yourself, would this pass the underwriter's caffeine-deprived Monday morning test? So drop your questions, of course, like and subscribe here and share with any foreign investors that is looking to get financing in the US. So let's dive into today's article. And of course, first of all, you are more than welcome to join our channel. We have thousands of videos and we're almost reaching 10,000 people. Of course, you should join our network and enjoy all of our thousands of investors online. Let me show you how this looks like. All right, so this is, for example, the group that we have on our social network for financing. You can see many case studies. You're welcome to join. You can join all of the courses that we have online. Our website is in 104 languages. It's have daily news about real estate and investing. We just reached almost 300 groups, discussion groups about Bitcoin, about Nadlan, about financing, about every state. You have daily news. You can see here, for example, Florida. You're going to have daily statistics about real estate. I need to log in for that one. You can see our members. We're almost reaching 23,000 members from all over the world, investors, experts. We have dozens of experts on our network. And of course, we are the largest mortgage broker for Americans and foreign nationals. We work with more than 3,000 lenders, and we are doing an auction between all of them. We are also building houses for investors in Texas and Florida. We are running the largest real estate events in Israel, Miami, and New York. And we have an entire network of off-market deals that you can pick from daily. And many of them are coming from our students that are learning about how to do wholesaling, multifamily, and fix and flip. So let's jump into the case study of today, why foreign nationals need liquidity in a US bank account for a DSCR loan. You can find it on the financing group on our Nadlan social network. And let's jump into today's topic. So DSCR loans for foreign national, the liquidity factor. Ready to invest in US real estate? As a foreign national, let's talk about the one factor that kills more deals than anything else, liquidity. Before that, let's jump into today's data, current market snapshot. So we can see the standard rates hovering between 6.4 to 7.2%. That's the current US mortgage rates. DSCR, the formal one, are 8 to 9%. We got to a foreign national investor a rate of 5.61. Okay, it's based on location, the type of property, the condition of the property, the year of the property. We're also building an entire real estate resume for each investor. The business plan is liquidity, as we mentioned on this topic. And of course, the DSCR rate and the size of the loan. So we are actually able to achieve below 6% for foreign nationals, while Americans are getting 6.4 to 7.2 for first-time home buyers. These are Americans. All of the investors that we work with are offshore, and the required reserve of most lenders for DSCR loans actually is between 3 months to 12 months. In this test case, our investor needed 12 months. All right, so what is the challenge for foreign nationals, basically? So foreign wealth, millions in offshore accounts. So you can have a lot of money in offshore accounts, but basically for DSCR loans, you gotta have a US bank account, and the funds needs to be in the US at least 60 days. And these are all of the regulations for money laundering. Basically, the lender doesn't want to be in a situation that the down payment that you placed for a loan will be back charged later on because you stole money or whatever. So many investors doesn't have US accounts. We actually open real US bank accounts with local banks here in New York and in Boston and different areas for foreign nationals without the need to fly over. And many of them have US bank accounts that are missing liquidity. All right, so there is a lot of loan denials, application rejected despite assets. Having millions abroad isn't enough. Without the US-based funds, your deal will collapse faster than a house of cards in a hurricane. So let's look at the case study, loan 1275. So the property, prime investment location with strong rental income potential. All documentation was properly prepared. Everything was ready. The borrower, wealthy foreign national with extensive international holdings, credit and income were not issued. Funds in US bank accounts. Lender couldn't verify liquidity through normal channels. Even with perfect paperwork and strong financials, the lack of US liquidity killed the deal. No exceptions were made. So, why lenders demand US liquidity? First of all, for confidence. The lender wants an assurance in crisis, just in case that the tenant moves out or the market drops down. They want to know that that investor have enough money between 3 months to 12 months of PITIA. What is PITIA? Principal, Interest, Taxes, Insurance Association. Many times also some maintenance, CapEx, and all of that. And lenders are looking to allocate risk management, calculable exposure for lenders. traceability, clear money sources. They want to see where the sources of the funds came from. Compliance, meeting regulatory requirements, because basically what happens, these loans are being sold all on Wall Street, MBS, mortgage-backed security loans, and the lender cannot make exception on the source of the funds because otherwise they won't be able to sell these loans. So basically, underwriters get nervous when money sits in a cousin's offshore trust fund in the Seychelles. All right, they don't want to have the money offshore. They need immediate access and clear paper trails. So this is why we saw many lenders now don't accept Wise, don't accept Mercury. They want an actual US bank account. The solution, your liquidity roadmap. Okay, so first of all, establish a US business entity. Form an LLC in the state where you'll invest. This creates your legal framework for operations. Open a US bank account with proper documentation. Many banks cater to foreign nationals and investors. Transfer reserve funds early. Move 6 to 12 months of reserves months before applying. All right, the money needs to be there for at least 2 months. All right, don't wait until closing week. All right, we had cases that we mentioned during the auction. Listen, you got to move the funds right away. The funds were not moved. And then basically what happened was that we couldn't close. The underwriter's perspective. All right. So basically, let's see how it looks from the side of the underwriter. Monday morning test. Would your application pass a caffeine-deprived underwriter's scrutiny? Time constraints. Underwriters have limited time to verify international funds. All right, they don't want to start getting into all of that. They want an actual US bank institute, FDIC insured, that in case of they need to liquidate the asset, they will be able to do it fast. Risk assessment. They must balance approval speed with compliance requirements and red flags. Unclear source of funds triggers automatic caution. Put yourself in their shoes, make their job easy, and they'll make your approval happen. Okay, so what should be your next steps? So first of all, research the banks, find those welcoming foreign investors, transfer the funds, move reserves early as soon as possible, apply for DSCR loans with your US liquidity in place, and close the deal. Now, if you do have a partner, let's say if it's an American partner, if they are 51% or more, okay, you will actually get rates and loan to value for an American. If you're doing a new construction, you need someone with experience that's going to be at least 15% in the deal. All right. If you have another partner that does have the liquidity, that's also a possibility. Stand the operating agreement with both of you as partners. It's very important to do it before sending the first operating agreement, because then the lender will ask you basically to perform a sale of shares from one investor to the other. You don't want to get there. All right. So like and subscribe, of course, and we are happy to assist you in anything that got to do with your liquidity struggles. Let's summarize it once again quickly. So first of all, loan 1275. All right, we were looking for a tailored option designed for foreign nationals seeking to invest in US real estate market. Unique terms for foreigners, offers unique terms that address the financial challenges faced by non-US citizens. Leverage global profiles, allow investors to leverage their global financial profiles without needing a US credit history. Enhances liquidity options, understanding the structure of loan 1275 can improve liquidity option. So basically in that loan, we have five properties in Indianapolis and everything else was already approved, just the factor of liquidity. So with foreign nationals, just in general, usually there are going to be higher down payment requirements, anywhere between 25% to 40% necessities substantial liquidity upfront. So sometimes we can get exceptions and approval based on higher down payment. And for foreign nationals, remember, there's no credit history. Okay, so because there's no credit history, the risk for the lender is higher. So it's complicated access to traditional banking products. So this is why we have many investors that are reaching for non-QM and DSCR loans, debt service coverage ratio loans, and of course, understanding liquidity needs crucial for tailoring banking solution and enhancing investor confidence. So specialized products, US banks offer unique financing option for foreign nationals. Limited lender options, foreign nationals face fewer lender choices compared to domestic borrowers. Assessing options, careful assessments of loan options help in selecting suitable financing. The loan types, options include non-QM, DSCR, and bridge loans, each with unique features. Higher interest rates on loans for foreign nationals tend to be higher than domestic rates, even though we show that we actually got lower rates for many of our investors. Usually the minimum DSCR for approval is 1. It means that the income of the property equal the expenses. So basically how you calculate it, you are taking the NOI, net operating income, you deduct from it the management and the maintenance, and you divide it by the PITIA, the Principal Interest Taxes Insurance Association. If the ratio that you got is 1, it means that the net income of the property equal the expenses of the property. All right. We did close loans that were with DSCR even below 1. I remember we had like 0.65 in New Jersey, a new construction home. But usually the lender will want to see what is the exit strategy. Income coverage benchmark. Achieving a DSCR of 100% means the income generated from the property is sufficient to meet all debt obligation, showcasing financial stability. All right, so what are the challenges for foreign investors? Challenges faced by foreign investors, legal complexities and tax implications. So all the time, consult a tax professional. We can help you with that. High interest rates and substantial down payments, limited access to credit information, complicated banking services and financing options. So let's see some success stories of foreign national case studies, successful investments. Analyzing case studies showcases successful foreign investment facilitated by Loan 1275, revealing effective financial strategies employed. Key metrics, DSCR and liquidity. The key metrics such as debt service coverage ratio, DSCR and liquidity measures highlight effective strategies that enhance investor confidence. Lesson learned, best practices. Lesson learned from this case can inform best practices for navigating the US banking, especially for maintaining liquidity. Tailored financial products, successful outcomes illustrate the potential of tailored financial products designed specifically for foreign nationals. So how will you be announcing the liquidity solutions? Flexible lending criteria. Banks should develop more flexible lending criteria tailored for foreign nationals. So we work with banks that actually helping and doing all of the know your client KYC for the client, even if they are not in the US. Lower down payment option, introducing lower down payment options alongside competitive interest rates. Educational programs, implementing educational programs focused on liquidity management will empower foreign investors, and international bank collaborations. So first of all, rising demand for mortgage products. We see a global investment increase. The demand for foreign national mortgage products is expected to rise, offering new opportunities for banks. Innovations in banking technology. Advancements in banking technology are likely to streamline the application process, making it easier for foreign investors to secure financing. Regulatory changes enhance accessibility. Anticipated regulatory changes may further improve accessibility for foreign nationals seeking loans. And staying informed is key. So the liquidity needs of foreign nationals, understanding the liquidity needs of foreign nationals is vital for effective banking solutions. And as for loan 1275 and similar products, can bridge the gap for foreign investors, providing essential funding options, addressing challenges and leveraging opportunities, will enhance the foreign investment landscape and forward-looking approach. A forward-looking approach will ensure banks remain competitive in this evolving market. All right. So basically, now I want us to hear a conversation that will explain all of this situation, and I want you to write in the comments what.
Welcome to the deep dive. Today, we're really getting into something important for foreign nationals looking at U.S. real estate.
Yes, specifically how to get financing. We're zeroing in on DSCR loans.
Right, those debt service coverage ratio loans, the ones tied more to the property's income potential.
Exactly. And the big question we're tackling is, what are those, critical financial steps you absolutely need to get right to secure one of these loans?
To make it real, we're looking at a case study. It's from Nadlan Capital Group, and it really shines a light on the common challenge.
It does. It's a perfect example of the kind of hurdles investors can face.
So our mission today, pull out the practical, actionable stuff for you, the listener, if you're a foreign national thinking about investing here. We want you prepared, basically. Avoid the pitfalls.
Okay, let's jump in. The case involves a loan, loan ID 1275. The borrower was a foreign national named Ziv.
Right. And Ziv was after a cash out refinance on a property he owned in Indiana. Seems standard on the surface.
Mm-hmm. The estimated monthly payment, the PITF, that's your principal, interest, taxes, insurance, was calculated at $2,062.
Okay, just over $2,000 a month.
And based on that, the lender said, okay, you need to show us you have liquidity, specifically enough to cover 12 months of those payments.
12 months. So doing the math, that comes out to roughly $25,000.
Correct. About $25K.
So far, so good. But this is where things took a turn, wasn't it? The hurdle wasn't just having the $25,000.
Exactly. It wasn't just about the amount. It was crucially where that money was and how long it had been sitting there.
The catch. So what was the specific requirement that surprised Ziv?
The lender needed that entire $25,000 parked in a U.S.-based bank account. And not just parked, but seasoned. It had to have been in that account for at least 60 days straight.
60 days. Okay. And Ziv's situation, where was his money?
Well, that was the problem. He mostly used a Wise account, the online platform.
Yeah, Wise, formerly TransferWise. Lots of international folks use it.
Right. But he only had about maybe $500 in it. And the lender, well, they didn't consider Wise or similar platforms like Mercury, these sort of virtual banks. Mm-hmm. They didn't count for this requirement.
So Wise and Mercury are out. Why is that? Why the insistence on a traditional U.S. bank?
Well, it really boils down to how lenders view risk and regulatory oversight. Traditional U.S. banks, your brick and mortar types, they have very established histories and reporting relationships with U.S. regulators.
Okay, so it gives the lender more confidence, verification.
Exactly. More assurance for the lender, basically. And another really key point here. Ziv couldn't use the money he was getting from the refinance to meet this reserve requirement.
Ah, right. So you can't use the loan proceeds to qualify for the loan itself. That makes sense.
Precisely. The liquidity had to be there before closing. It had to be pre-existing. It had to be in the U.S. banking system. And it absolutely had to be seasoned. Those are the kind of non-negotiables.
Okay, so let's dig into the why a bit more. Why this focus on U.S. banks and seasoning? What's the lender's motivation?
There are a few layers, really. First, it's about financial stability. Seeing funds seasoned in a U.S. account suggests the borrower isn't just scrambling for cash or borrowing it short term.
It shows a bit of financial history within the U.S. system.
Right. It gives them confidence. Second, it ties into regulations. Lenders have to follow anti-money laundering rules, AML, and verify assets. Funds sitting in a regulated U.S. bank for 60 days provide a clear, more auditable trail.
So it helps them tick the compliance boxes.
Definitely. And third is plain old risk management for the lender.
How so?
Well, if the property sits vacant for a bit, or maybe rental income gets disrupted for some reason, that reserve is a buffer. It means the borrower can still likely make the mortgage payments for a while. It lowers the lender's risk.
Got it. That makes perfect sense. Okay, let's nail down this seasoned funds term. We've said 60 days, but what else is involved?
So fundamentally, it means the money has to be in that qualifying U.S. bank account continuously for at least 60 days before, usually before the final loan approval or closing.
Just sitting tight for 2 months?
Pretty much. And this is important. The lender will scrutinize the bank statements for that period. They're looking out for any large, sudden deposits that don't have a clear explanation.
So you can't just dump 25K in there before applying?
Nope.
Yeah.
That raises red flags.
Yeah.
They want to see that it's genuinely your money and it's been stable, not just borrowed quickly to tick the box.
Right. Ensuring the funds are legitimately yours and accessible. Okay, back to Ziv. He hits this wall. What did he actually do next? And what advice did Nadlan Capital Group give him?
Well, Ziv had actually done some other things right. He's already working on getting the property title transferred into an LLC.
Okay, smart move for liability, usually.
Yeah. And he'd signed the initial loan docs, like the LOI, the letter of intent, and got escrow going. So progress was being made elsewhere.
But the liquidity was the big roadblock.
The main one, yes. The lack of seasoned U.S. funds. Apparently, he even thought about using his business partner's bank statements.
Could that work? Using someone else's statements?
Generally, not really. Lenders want the funds to belong to the borrower, the person on the loan. That's where Nadlan's advice was really key.
What did they tell him?
Very clearly.
Hmm.
First, open a traditional U.S. bank account. They specifically stressed, not a virtual one likewise.
Step one, get the right kind of account.
Absolutely. Step two, transfer the $25,000 into that new account immediately. The 60-day clock doesn't start until the money lands there. So time was now really of the essence for him.
Okay, start the clock ticking ASAP.
Exactly. And then as a sort of plan B, they suggested he look into getting a co-sponsor for the loan.
A co-sponsor, like someone else who does have the seasoned funds.
Precisely. Someone who meets the criteria and could essentially guarantee that liquidity aspect. It's a backup option.
Okay, that's really practical advice. So pulling this all together for our listeners, foreign nationals eyeing these DSCR loans, what are the absolute must-do takeaways from Ziv's situation? What's the essential prep work?
Number one, without a doubt, open that U.S. bank account early, like way before you think you need it. Don't wait until you found a property or started an application.
Get ahead of the game.
Totally. Number two, get the required funds transferred into that account as soon as you can. Start that 60-day seasoning period. Don't delay it.
Okay, U.S. account early, funds in early. What else?
And number three, seriously consider working with professionals, brokers, advisors who really specialize in these loans for foreign nationals. They know these quirks, these specific requirements, like the seasoning rule. They can guide you around them.
Yeah, having someone who's seen this before seems invaluable. I bet Ziv wasn't the first person surprised by this.
Oh, definitely not. I remember another case, a client had tons of assets back home, but zero U.S. banking footprint. Same issue. Really hammers home the need for that upfront planning.
It just sounds like being proactive, specifically thinking about the U.S. banking side of things, is just crucial for making this whole process smoother.
It really, really is.
Mhm.
And, while we focused hard on this one liquidity rule for DSCR loans, it's worth remembering this is just one piece.
Right. Nadlan Capital Group, based on their materials, seems to cover a lot more ground for foreign investors.
Yeah, exactly. This case study is a great deep dive into one specific issue, but they talk about helping with all sorts of loans, purchase loans, refi like Zivs, new construction.
And they mentioned something important, too, that it's possible even without a U.S. credit score or a social security number.
That's a big one, yeah. They emphasize that options exist, which opens doors for a lot of international investors.
Good to know.
And their support seems broader, too. They mentioned helping find properties, investment opportunities in Florida, like new builds starting around $225K, apparently, plus educational stuff like their Nadlan Real Estate University.
So kind of a full-service approach for foreign buyers.
Seems like it. They even touch on practical things like, dealing with currency exchange rates and finding cost-effective ways to transfer funds internationally. It's all part of navigating the U.S. market from abroad.
Right. And they even hinted at opportunities in like short-term rental market. Miami was mentioned. Shows the range of possibilities.
Exactly. So, wrapping up this deep dive,
Hmm.
what's the single most critical thing to take from Ziv's story?
I think the bottom line is crystal clear. If you're a foreign national looking at DSCR loans, you have to get your head around this US-based Syrian liquidity requirement, and you need to act on it early.
Absolutely. Ziv's case just shows how easily you can get tripped up by it, even if everything else seems okay. It can cause real delays.
It really highlights why that proactive financial planning and maybe choosing the right advisors who know this landscape is so important.
Couldn't agree more.
So here's something to chew on, thinking about Ziv's surprise. What other parts of investing in US real estate from abroad, things that might seem simple on the surface, could actually have hidden complexities like this one? And maybe more importantly, what resources can you tap into now to make sure you navigate them smoothly? Definitely food for thought. Thanks for joining us on the deep dive today.
All right, guys. All right, so this was the deep dive for today, and we got a question from the audience.
Into something important for oh, hey, welcome. What's up?
Yeah, so basically, we got a question from one of our audience. Like, what are the major implications of all of these regulations and money laundering as for selling these loans later on? Because most of the lenders doesn't service the loans for later for many years later.
Hey there, great question.
Yeah, that's a really important angle to consider.
Okay, let's unpack this. The implications of these regulations, like anti-money laundering, are pretty significant.
For foreign nationals seeking DSCR loans, it directly affects things like this liquidity requirement we discussed.
Exactly. It's why lenders are so strict about where your money is and how long it's been there. They need to comply with those regulations.
And when it comes to selling the loans, financial steps you absolutely need to get right to secure one of these loans.
To make it real, we're looking at a case study. It's from Nadlan.
Later, that additional compliance is crucial for the lender's ability to do that.
Because the buyers of those loans will also want to see that everything was above board and followed all the rules.
It adds a layer of scrutiny throughout the entire process.
Here's where it gets really interesting. So, our mission today.
Yeah, building on that, we want to pull out the practical, actionable stuff for you, the listener.
Yeah. All right, guys. So hopefully you learned today everything that got to do with liquidity, getting ready ahead of time if you're foreign nationals. Open a legit bank account in the US, send the funds 60 days in advance. Try to have 12 months of liquidity of the PTIA, the principal, interest, taxes, and insurance. Of course, like, subscribe if you are interested in information like that about investing and mortgages in the US. We are doing a deep dive to case studies of our borrowers. We service borrowers from all over the world that are looking to invest in the US. You're welcome to contact us. And thank you for joining, and we will see you in the next